Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson, and I'm making professional trading simple for everyone. Welcome to the Sunday weekend newsletter with all new picks. Well, not all new picks, but some new picks and my ideas on the stock market for this coming week. These newsletters are done every day except for Saturday, and I will let you all guys also know I have another video newsletter. I call it my weekly newsletter. I really need to change the name of it because it's not done just every week. I do those. It's a subscription service, $15 a month, and that gets you another video on Sunday, Monday, Wednesday, and Friday during the course of a week. It is similar to this in the respect that it's a video newsletter. Click play, watch it, and it gives you a whole bunch of new and different plays than what you'll see on this particular newsletter. And that one has 16 this week. There are 16 completely different stocks to watch and trade than what you see on this particular daily newsletter. It also, last week we talked about and played CVX, SRS, and TLT. And I also go into a lot more detail in those about the markets, where I see them going, other indicators to watch, other things to watch out for, so that you have a lot more heads up. It is definitely a value-added service. At $15 a month, it is by far the best deal going on the web. There is no other $15 service out there that will give you the kind of information I give you in that video, nor will it give you individual stock plays, support resistance areas, and stuff to watch. I'll tell you what I don't do in my weekly newsletter or my subscribers newsletter, and that's I don't give a lot of different plays. Why? Because I can give you 30, 50, 100 different plays, and everybody thinks that's a better value, but it's not. How can you possibly track 30, 50, 100 different plays during the course of a week? It's virtually impossible. I find and give you 10 to 20 of the best plays I can find. The best setups, the best ideas. I give you support and resistance areas, and give you the ones that I think are going to be the most beneficial after I choose from a list of about 50. So I take that list of 50, I cut it down to something that's much more manageable. I don't find that giving you all 50 is worth it to you because you can't possibly track all of them. It's a lot easier to just find the best of those 50 that I might find during the course of a week and give those to you. It is, for $15, the best deal going. There is no yearly commitment. It's month by month. Try it for 1 month is what? Maybe some people pay $8 in, $8 out of a trade. That's one trade for an entire month's worth of information. Every week I change the plays up. Every week I give you something new to play in that subscribers newsletter as well. Please consider it. It is a heck of a deal right now. And if you get in now at the $15 rate, later on I will be changing the price, and when I do, you will be locked in then at $15. I will never raise the rates on those that get started early with that newsletter. I also do intraday emails through there, and you've seen those in my videos, so I won't go on and on about that anymore. So let's get into the markets and talk about what we are looking at for the upcoming week. Here you have the Dow on a 60-minute. I want to show you a few things. Look at what we have on the Dow. See this channel? See how we've broken that channel? And now we're down below the channel. Now let's compare that to the SPX on a 60-minute, except that will be a daily. I chose the wrong one. Here's the SPX on a 60. You can see the channel on the SPX. We broke that, but we've retested the underside of that channel on the SPX. Let's look at the NDX. This is the NASDAQ on a 60-minute, and you can see that same channel, except on this one, as it broke it, it managed to get back up and into it. So the NASDAQ is showing us obviously more strength than the other two indices are. The Dow is the weakest, SPX next, followed by the NASDAQ. You can see it written right in the charts. So what we have to be watching out for is if the market takes a bounce, I would suggest that you start looking at maybe NASDAQ stocks, maybe tech stocks. Those have the best chance of maybe bouncing the furthest, for lack of a better word. The Dow is the laggard. Those would be best for if the markets move down, it would be best to start looking at some of those stocks. I've tried to give plays this week that will kind of cover all the bases, but I want you guys to get an idea of how I do some of my analysis during the course of a week. And you can see where the NASDAQ has been the strongest. On a daily, the NASDAQ is obviously the strongest here. We're going to show you that first. Here was the rising wedge that we broke out of on Thursday, and now it's back to this channel line support down here, but it's just barely hanging on. However, it is still at channel line support. There's actually not a bad risk to reward ratio if you want to take a trade on the NDX to the long side, but you want to be careful, make sure you have a stop below this 50-period moving average. If it breaks that, it could fall for a while. Especially if it closes below this, it could be pretty disastrous for the markets at that point. Let's take a look at the Indu on a daily. I went ahead and added this chart. Haven't had it in there before, but look how it's broke below, bounced off the 50 already. And now this one has actually reached its 50 where the NASDAQ has not, and you can see it hanging right below the channel line support. If we look at the SPX on a daily, you can also see here where it has come below, bounced off the 50-day moving average, and also closed below this channel line resistance. These are the levels to watch going forward. Any move down from this point will all but really negate a potential bull flag on the SPX. The Dow has all but broke its bull flag, and the NASDAQ has not. So the SPX, the NASDAQ still have an opportunity to be looked at as a bull flag right here, but there is not a lot of wiggle room for the bulls. What they really need to do is the bulls have got to get this thing back up and over 1040 if they even stand a chance. 1050 ultimately would be the line in the sand, I think, for the bulls longer term. If they can get it back up and over 1050, maybe we can see it creep back up here into the 1060, 1070, and eventually the 1080 area. But obviously, first things first, this 1040 area is probably going to and should prove as very strong resistance in the future. This was the line in the sand I had for you last week, and you can see that once we broke 1040, it was off to the races.